In this video, I'm going to show you how you can turn $10,000 into $50,000 really fast. I've done this multiple times, and I've also done it on my own personal challenge account. Don't worry about smashing the like button, subscribing, or looking for the Discord link or membership. We're going to get to that, but first I want to dive right into this right now. Recently, I've done this with multiple students in my Discord, and I'm going to show you a student that has actually turned $8,000 into $22,000 in just a little over 3 months. So by the time we get to Christmas time, she'll be closer to $30,000, and we are over halfway there, meaning you can turn $10,000 into $50,000 in about 6 to 8 months, roughly. If you're on the ball and do your due diligence and pay attention and execute everything and follow your rules and follow your psychology and sentiment like I always teach. Let me show you guys exactly how you can set your portfolio up. If you have a $10,000 portfolio or a $20,000 portfolio, you can turn that into $50K in about 6 to 8 months, depending on the way you trade. But if you follow my guidelines, it's very possible to do that. And for a lot of other people that are struggling with this strategy or maybe slower learners, 8 to 12 months at the most. But when you think about that, that's a 5x return in a year. That is insane. But let me show you exactly how we're going to execute this strategy. But first, if you are confused by any of these strategies in this video, I don't recommend taking on the risk. If you're confused or don't quite understand it, I offer a full training course, Discord to surround yourself with like-minded people just like us, and I offer full one-on-one coaching to help you guys grow your portfolio. Maybe you want to retire early, you want to take advantage of some extra funds and grow them exponentially. I would love to help you if you show up serious and committed to learn. I show up serious and committed to teach you everything you need to know. You can see all the profits my students have made on the screen. This could be you. All you have to do is go to investwithcorey.com. Link is in the information box below. And when you get there, you can click on case studies and hear from my current students. Josh has taken his $300,000 account to $400,000 in 3 months, 30% return. Sherry right here, I showed you her portfolio in the Discord. She went from $8,000 to $22,000 in just under 4 months. And you just click on training. Any question you have will be answered in this video. And then you guys can book a call with my team and I so that we can build a complete system that works just for you. I look forward to seeing you soon. So one of my students that I'm going to show you here is Sherry. She started right here, you can see, with $8,000. She reached $17,000, which is more than 100% return, a 2x return in just a little over 3 months. Then in the last month and a half, she's went from $17,000 to $22,000. So we're looking right now at just under 5 months, and she's went from 8K to 22. Now, if you start with 10, then you'll have a little bit extra capital. She would probably be closer to 25 by now. So basically 10K to 25K, 4 to 5 months. That's what Sherry has done. And then 25 to 50K is actually easier. So you could do that in about 3 months. So this is about like I said, an 8-month, maybe 10-month, just depending on how you trade. But I'm going to show you exactly how to do this. So what you want to do is find stocks that are very quickly and ever growing, or stocks that are really volatile and move a lot, and try to get them at the bottom. Because you have a $10,000 account, it's going to be hard to do that because you can't acquire shares on Tesla with only $8,000. And you can't do it with Meta or any of these big stocks. Even Wayfair would be difficult because you'd only be able to execute 100 or 200 shares with a $10,000 account. But what I'm going to show you is very powerful, and it's going to help you grow your portfolio exponentially and very, very easily. Now, let me show you how we're going to do this. As an example, Sherry grew her account on Affirm. However, we're going to look at Wayfair, and we're going to look at the previous dip. Wayfair dips down because of insider selling. If it breaks the 47.50 or lower, it might break down into the 43 or even 42. If this happens, this is great because Wayfair is highly likely to return to the mid to high 50s by the end of the year. This is exponential growth for your portfolio. So let's just say we wait and Wayfair decides to stabilize somewhere in the $47 range. Let's say right here, it starts to come back up for earnings. With earnings coming up, we will go over to Wayfair and I will show you what we will do. We are going to buy leap options. Now, I'm not a very big advocate for buying options unless it's to hedge positions, to protect you. It's more specifically on puts. But if you are going to buy a call option, I only buy leaps because the theta is a lot lower. This is critical. And let me show you what I'm talking about. If you buy a $47 call right now, it's got a 55 delta, which is pretty good. The theta is 23.56 or 0.2356. This is $23 a day in theta. That's a lot. Even if you go out over 2 weeks on a $47 call, the theta is going to be $9 a day. If we buy a call option for May 16th and buy 47.50, the theta is going to be $2 a day. So it's going to be 20% of what the call option would have been going 2 weeks out. Therefore, every day that passes, you're really not losing money. What I'm looking to probably do is get into May or June. You could do May, and you want to buy an option contract that is somewhat deep in the money. So a $40 call option is 73.69 delta. Now, this means that you have a 73% chance that the stock will end up in the money on expiration, and a lot of people will tell you that, but deep within the delta, there is actually another meaning for it. 73 delta is the equivalent of controlling 73 shares, which is why if the share price goes up $1, this option goes up by $73. And gamma will then add to it, and then it will go up to $75. And Wayfair goes up another $1, it'll go up to 77 or 78, and it works its way up. I would say the best way to do this would be to buy about a 70 delta. So for example, you would buy two $40 call contracts on Wayfair, and you could probably get filled for about $1,400. So it'll cost you $2,800. So we're gonna go put this in the whiteboard. $2,800. If I can get this to work, that is. So we're looking at Wayfair, 2 times $40 leaps, and it's going to run you about $2,800. Now, when Wayfair runs, which could take, let's say 2 to 3 weeks, it's going to be very profitable to have those leap options. And I'll show you why. If Wayfair goes back to $55, that means the stock price is going to go up by $8. 8 times 73, it's going to be $584. So you're going to be looking at about a $580 gain, $584 per call. Now, with earnings, this is likely to happen quicker than normal, but even without earnings, this would happen in the next 2 to 3 weeks due to elections, uncertainty in the market. And even outside of elections, when stocks like this go down, they level off within 2 to 3 weeks or a month, they start to come back up, especially with good news. But in this particular instance, you stand to make about $1,000 in a month. That's a lot. On a $10,000 account, you're only utilizing $2,800. So that's 30% return in about a month. In a year, that's 360%, almost a 4x return. So you can see where we're going with this. So you will execute that. And let's say Wayfair goes to $55. Then you would then sell these two $40 leaps, and they would be worth about $3,800, maybe a little bit more. Because remember, it's going to be $73 increase for the first dollar, then 75, then 77. So realistically, it's probably closer to $1,200 per contract if Wayfair goes to 55. So if we're really going to be honest here, what we'll do is see $73 plus $75 plus $76 plus 77. That's a $4 move, $5 move, $6 is $460. So yeah, you might get about $600 per contract. So I was right. Could very well. So we could say $1,200. So about $4,000. So $1,200 profit off of your $2,800. Okay. And this usually happens within a month. Now remember, this video is showing you the strategies. I'll show you how to pick the stocks in more detail. But then we're going to go look for another stock that we can sell some credit spreads on at the exact same time. We're going to do some puts and some calls. Now, specifically on Tesla, we can see that the stock has gap filled down. This big wick on this candle is a part of the gap, and it filled it. So the bottom of this candle becomes resistance, a lot of resistance. It's like a ceiling. In order for Tesla to break through this would take a lot of immense buying pressure. You can see for the past week and a half, it's done pretty much nothing. So what we will do is there's earnings, but if there wasn't earnings, what we would do is we would sell a 230 up here or a 235. If we played 235, which is way up here, this is very safe. It's at the top of all of that selling pressure. So we will go over to Tesla and we will sell a call credit spread going out a little over a week. Sell call. We will choose the 235 or the 240. And now earnings is here. So this is going to be a little bit more volatile than normal. And we're going to look at the implied volatility. Usually Tesla's around 60, 70%, just depending on the week. So we're going to look at selling the 235 or the 240. Volatility is 61. So it's about average still. But outside of earnings, this 240 would be worth maybe a little bit less, maybe like $10, $15 less. But let's just go ahead and sell this. And we're going to buy the 250. You will see that this is a 20 delta, which is a little on the aggressive side considering earnings and whatnot. So we will go up to 245, which is a 15 delta. Very safe. Highly unlikely Tesla, even with earnings, goes to 245. I mean, it could happen, but it's up there. So we're putting up 1,000 to make 93. We could sell maybe one or two of these safely. Two is pushing it, but let's say we go ahead and sell two of these on Tesla, which is $2,000 of our money. Actually, $1,814 for 186. So we'll do Tesla, 2K to make $186. And this is going to be what we make on Tesla 3 times a month because it's going out a week and a half. So times 3 equals 558. And this is a very safe call credit spread. Very safe. So we are looking at 1758 from these two. So we've only utilized $2,800 capital plus 2K. So 4,800, not even half the money. And we've already made $1,758 in the month. We will look for another stock. Now, remember, if this goes bad or the stock starts to move, let's say Tesla's going up, getting closer to your top line up here at 245, like we actually went way up here. So if it does work its way up there, it has to close. The stock has to close Friday on expiration in the money. Otherwise, even if it's only off by a cent, you still keep all the premium at no risk. So understand that the stock has to go to 245. If it ends up working its way up little by little as we get closer to expiration, Tuesday, Wednesday, Thursday, it's going to be in the negative quite a bit. As we get closer to Friday, it's only going to have intrinsic in the money value. So if the stock is at 243 or 244, then you're good. It's going to be all profit. This contract is only going to end up being worth maybe 50, 60 bucks or less on expiration day, and it's just going to decay rapidly on Friday. If the stock goes above before Friday, settles down and starts to come back down, you can get as close to expiration as possible, buy back for a small loss or break even, and sometimes a small profit, and resell at a higher strike price going out another week or two. And a few times throughout the year, this will happen. It's inevitable. But most times, if you do your due diligence, like I'm showing you, you will not have this issue. So you want to make sure you're looking at gap fills. We're below the 100-day. The 10 and the 20 are below 100. The 10 is below the 20. And we're slightly oversold and we're consolidating in the middle. So Tesla is unlikely to break this barrier. We go look for another stock. I'll show you in real time exactly what I'm looking for. We look at Amazon. Let's look at what Amazon is doing here. We can see it reached a peak, came down, bounced off support, came up, came back down, bounced off the 100, and now it's steadily going up on the 100-day. So we could sell the 180 or the 182.50. Probably go 182.50, giving us a $7 move. We will go out on Amazon. See, we sold a call on Tesla. We're selling a put on Amazon. This way, if the whole market tanks, then we profit on the Tesla and only lose on the Amazon instead of having 2 calls. And then if the market goes up, it fries. Or 2 puts, the market goes down, it fries everything. So we don't want that to happen. We're going to sell a put on Amazon going 10 days out. And we're looking at the 182.50, which is a little aggressive. 31 delta is honestly just a little too much. So we'll go out to 180. Now remember, Amazon does have earnings. Outside of earnings, this wouldn't be the same. You could go a little bit closer and strike, but we'll utilize earnings. We'll go to 175. This is very safe, 16 delta. We will click that, and then we will buy the 165, which will give us $103 profit. Amazon would have to drop $13 in 10 days. Highly unlikely outside of earnings. Even with earnings, it's slightly on the unlikely side. They'd have to miss earnings, and it'd have to be pretty rough for this to happen. So we click continue. We could probably get filled at $1.04. Maybe we sell 2 of these, put up another $2,000 collateral, or $1,792 to make $208. So we put up for Amazon, we put up $1,900 to make $208, I believe it was, 208. And then we're going to times this by 3. which is $624. So we've only utilized $7,000 capital, 624 on top of 1758. I'll add this up so you guys can see it. 624 plus 1758. There we go. 2382. So we're 2382 profit, and we can still sell 2 more credit spreads. So that's a lot of money. $7,000. That is pretty close to a 30 to 35% return per month. So you figure, like I said, we're between 3 and 4x per year, means 10K turns into 30 or 40 quite easily. And this is still fairly conservative because we're only selling 15 deltas. We could get a little more aggressive than that. Let's go pick another stock. Let's say we want to go look at Meta. We're going to go look at Meta. Meta is very bearish right now. It's dropping just like I said it would. So what we would want to do is we would want to sell a call credit spread. We can see that the stock price is resisted in multiple spots on the 100-day average here, here, here. So there's 3 there. And then it also utilized the 100-day as support here. So it's a very strong metric to go off of. And we've got pretty neutral territory on the RSI. So with that being said, the chances or the likelihood of Meta going above 584 is on the slim side, and going above 588 is even less likely. 588 is almost, I would say, a sure thing. And if you really want a sure thing, I would say 590 to 593 is pretty much sure for 10 days. So let's go over to Meta, and we are going to look to sell call credit spreads going out 10 days. And we're going to pick a strike price. We could do 585. I say 590 is the safest. And we're going to look at some of these deltas. If we do 590, then this is going to give us 71% chance, which again is going to be volatile because earnings is coming up next week. So we will have to go a little bit higher. Actually, it might be a lot safer to go up to 600. So we'll move this up to 600 because we don't want to sell anything above 20 delta or 25 delta at the most. So we're going to go up here to 600. This gives us a 36 delta. That's crazy. But then again, with earnings coming up, it's no surprise. So let's go ahead and look for a little bit higher on Meta. We'll go to maybe 630, which is a 20 delta. Maybe a little higher, 640. Okay, 16, that's perfect. 640, buy a 650. We make $128 on 1,000, and Meta has to jump like $66 in 10 days. Now, this is really insane if you want to know the honest truth. There's really no chance, in my opinion, that Meta is going to run this much in 10 days. Now, on earnings, yes, because we're doing this out to earnings, it could. If we weren't running this strategy during earnings, then we would go out 3 days and we'd be looking at the 590, which would be a delta of 17. And it would be 138 minus 44. So it'd be about $80 to $90. But we're going into Tuesday. So this would be about $100 per week, roughly. So let's do that because we don't want to use an earnings play. We're going to do this outside of earnings. So we'll click on 590. Then we'll buy the 600. Now, keep in mind that the theta on this option contract is $56 a day. So if we had to open this yesterday on Monday, this would be worth about $56 more. So this would be about 140 due to the spread. So we're going to say 140. We sell 2 of these, another 2K to make 280 per week this time because Meta is more juicy for premiums. And we're going to do Meta. Remember, this is our number right here. Don't forget it. We're going to do Meta. And we're going to have 2 of these, and we're going to be doing about 280 per week times 4. It's 1120. So there you go. $1,120 plus 2382. And this is utilizing about $9,400 capital, $9,200 capital, $3,500, which is about 37%. Okay. Now, obviously, next month, you're going to make more money because now you have $10,000 plus what you made. So in month 2, you have $13,000. So this month, you're actually going to make more money. And I'll show you what I'm talking about. Instead of running 2 of the Teslas and 2 of the Metas into Amazon, now you could add 2 more because you have 3 grand. So you could add 2 or 3 more contracts. So let's just say hypothetically that you decided to go over and look at Netflix. And you decided that the chances of Netflix dropping back to 740 was unlikely, which I would say it is. The 100-day average is 734. So we would do a 735 on Netflix. That's how we would trade that. 735 on Netflix for a put credit spread. Go out 10 days. And 735 would be good. This is 86%, 14 delta. Very, very safe and strong. We could push the boundaries at 740, but we're doing this very safely, so we hardly ever lose. 725, $1,000 spread, $104. We could sell 2 of these and still have money to spare. Another $200 times 3, another $624 a month. So 3502 plus 624. So in month 2, you'd make 4126 plus 13503. So after you completed month 2 going into month 3, you have $17,000. If we were just to go off of what you made the previous month, because remember, you're going to have 3 grand more, so you could make about another 600 a month. We're going to have 3503, the original month, plus another 1200 because now you have all this extra capital, an extra close to $8,000 capital. And now, after completing month 3, you have $22,000. So you go from 10 to 22 in 3 complete months. Then, in 3 more months, you'll be closer to 40K, 45K. Like, watch how this plays out. You would add 2,400 profit plus the 3,503. Then, now, we're also going to have $4,000 extra. So you'd make about another 624 a month quite easily. After you complete month 4, you're pushing $30,000. So you can see how in a year or less, 10K to 50K is easy. To be quite honest, I showed you can do 10 to 30 or 28.8 in as little as 4 months. By the 6-month mark, you'll be sitting around $40,000. So 50 is going to come in about 7 or 8 months. You could realistically get 100K from 10K in about a year and a half to 2 years max, probably way sooner than that. But this is still a modest approach. You just have to understand how to take profits on this situation, and you do not want to be in a position where you are going to be losing money. So the best way now to execute these trades is you want to sell your calls. For example, we're selling a call on Tesla. Actually, I already have Tesla open. So what we would do is in the Monday morning, when the market opens, we're hoping the stock price comes up like it did here. All this green, then we sell our call. And then this way, when the stock starts to settle down, we're already in the profit on Monday. And we're going to let theta do its thing. Because if we sell the call down here, then as the stock goes up, it increases in value. We go in the negative, and then we got to wait for the stock to settle down to break even. Whereas if we wait for the stock to rise, we get more premium for the call. Then when it starts coming down, then we're already in the profit the first day or two. Theta is killing it. We're consistently making money. The same thing goes for the put credit spread. When we are looking to get into the put position, as an example, on Amazon, we are going to wait for the stock to come down. So on a Monday morning, like yesterday, you see how this happened? The markets opened right here. We wait for the sell-off. It comes down right here by 8 o'clock in the morning. And we're going to go to the 1 hour. So I can show you right here, 11 a.m. So right around 10:30 or 11 o'clock in the morning, we would sell this put for 182.50 while the stock is at 185. Then it runs up. We're probably at a 50% profit by Tuesday afternoon. So we could realistically take 50% profit, and then we would just maybe sell another put down here to be even safer. But that's what you do. You want to wait for puts. You want to wait for the stock to drop, consolidate, have some support. As it's just starting to move up here like this, sell that put. This way, when it completes this move, the more it goes up, you're already in the profit. Now you're in the profit. When the stock comes back down, it's already been a day and a half, 2 days. You're still slightly in the profit. It goes up. You're more in the profit. Theta is killing it. It's all profit. You're in the green the whole time because you're timing it. So you wait for the stock to sell off. Stock comes down. Sell your put. Stock goes up. What we're looking for really is this resistance on this red candle and this doji candle that's green. Once we see that green doji and it closes in a doji and we start to see this green candle, we sell the put for 182.50. The same thing on Tesla. We wait for the stock to come up. We see all this resistance. It starts dropping. The 10-day is still below the 20. We sell the call. It starts to tank. We are good. So if you guys are confused by this, and believe me, it is confusing. Like I said earlier in the video, if you want to retire early, grow your portfolio, learn all of the strategies that I have to offer with years of experience, I would love to help you. I offer full Discord, training course, and one-on-one coaching. It's a very serious mentorship. So if you show up committed to learn, I show up committed to teach you how to grow your portfolio. And like I said, my students are making great profits running strategies just like this. But this is just one of dozens and dozens and dozens of strategies that I use to exponentially grow your portfolio. Leap options, you can also sell covered calls on your leap options. You guys can sign up. The link's in the information box below, investwithcorey.com. You guys can see the profits my students are making on the screen right now. I showed you guys this earlier. Everybody is making money in the Discord, and it could be you. So when you're ready to take control of your financial freedom, I am ready to help you grow your portfolio. Another thing you can do on leap options, as an example, with Netflix, if you buy a leap option deep in the money, let's say we're going to buy a call going all the way out to June of 2025, just like we talked about earlier on Wayfair, you could buy a $680 call option, 75 delta, and then you could sell covered calls against it. Now, on a $10,000 account, you couldn't afford this option, but as you get to $30,000, $40,000, you could, and it will allow you to sell covered calls. And if you're going to sell covered calls going out 10 days on Netflix, you'd want to sell something in the neighborhood of around a 15 delta, which would be about an 805. You could generate about $800 to $1,000 a month just on this one contract. Maybe a little bit more, maybe about $1,600 a month. So it actually gets easier as you go along. A lot easier, because once you grow in the first 4 to 6 months from 10K to 30 or 40K, like I showed you, then you can buy a Netflix leap option and just make $2,000 a month for a couple of months just on this one leap. And you could do another one on Meta, another one on Wayfair. And then by the time you know it, you're reaching close to $100,000. This is how you grow a small portfolio. You want to run put and call credit spreads. You could also run poor man's covered calls, which is the leap options, sell covered calls against them, and then sell them for profits as the stocks run. It allows you to get into stocks that you otherwise couldn't afford. Once in a while, it doesn't hurt to run another strategy, which is fairly risky, but it's low cost. So as an example, let's look at Meta. And let's say we think that on earnings, it is likely on the 30th that Meta is going to end up somewhere around $600. Well, earnings is on October 30th. So that means that we're going to look at the November 1st contract, and we're going to go to Meta, and we're going to run a very specific, aggressive strategy. And what we are going to do is we are going to sell a $600 and maybe $10 call option. We're going to buy the 615 and the 605, and we are going to click on custom. We want 2 sells to match the 2 buys. There we go. And we can see it's going to cost us $18. That's it. You can't lose any more than $18. However, if Meta goes to $610, we make $482 from $18. Now let's divide 482 by 18. 482 by 18. This is a 26x return. So if you were to make this trade on different stocks and you were to do it 10 times and you only won one of those trades, just one time you got the trade in your favor, you would lose 9 times 18, which is 162. Let's just say you made a little over half of it, 250. Even winning just one trade, you'd make close to $100. Just 1 out of 10, which is, like, honestly, really bad. You could probably win 2 of them if you really know what you're doing, maybe even 3. But this is a 26x return. So if you were to say, okay, well, I don't mind losing $50. Maybe we run 4 of these. Yeah, we'll run 4. You're turning $70 into almost $2,000. This is another powerful strategy. And if Meta goes up to, say, 606, 607, you could sell out, make 900. 72 and a 900. that right there is like a 12x return. So if you add this into your portfolio and mix it in with your put and your call credit spreads and your leap options and your poor man's covered calls while selling covered calls against them, and you mix this up on good stocks and you're doing your due diligence, technical analysis, fundamentals, you're keeping up with the news, you can diversify your portfolio with these strategies and you can see how it adds up. I showed you how you could take 10,000 to 40,000 in as little as 4 to 6 months. And if you're adding this in a couple of times a month, at worst, you're only losing about $100 to $200 in a month, where you're making $3,000-$4,000 on your trades anyway. And if you win a couple of these trades in 6 months, you're up, like, just in this one trade, you could be up $2,000. So you could be $2,000, $3,000, $4,000, $5,000 in a couple of months, depending on the ones that you trade that go in your favor. But on average, I win 30% of these trades and they're 26x. So if I lose $72 and I lose that, I don't know, let's say 7 times, 72 times 7, that's 504. And then I make $2,000. It means I made $1,500, but then I also made $2,000 2 more times. So that's $5,500 out of 10 times. Even if I took half profits, I could make $3,000. So in 2 months, I can make another $3,000, or even in 3 months, it's $1,000 a month extra income. So you can see how easy it is to really go from 10,000 to 50,000. I started my challenge account, the account that we're in right now on Robinhood. I started this account with $5,000, turned it into 12,000 in just over 2 months. And then I turned that 12 into $55,000. And I did that in only 5 months. And my students are doing it. So this is not hard once you get the hang of doing it. You ultimately can take control of your portfolio and grow it exponentially with these strategies. You want to do leap options, the poor man's covered call, and sell for profit, or sell covered calls against it. You also want to run put credit spreads and call credit spreads. And you also want to look at running the butterfly that I showed you as well and add that into your portfolios. And you also want to run the butterfly and add that to your arsenal of strategies in this small $10,000 account to grow it exponentially in 6 to 8 months or 10 months, depending on how you trade and how things go for you. Ultimately, with these strategies, you can grow your portfolio quicker than you thought possible. You just have to follow your rules and run your risk management assessment on stocks, understanding where the top and the bottom are, support and resistance. And you want to make sure that you're executing puts when the stock is hitting a bottom and consolidating and starting to move up, and sell your call options when a stock has hit a ceiling, resistance, starting to level off and just starts to come down. Then you go above and sell your call credit spread. And you want to make sure to time your butterfly trades on stocks that are likely to go up and have a general idea on where that price is likely to fall. This way you can maximize your profits. Thanks so much for being here, guys. If you want to sign up for the coaching and the Discord, the training course, I would love to help you, fam. I'm driven every single day to help you guys achieve success and financial freedom, just like I have and just like my students have in the Discord. I'll see you guys on the next video. Take care of yourselves. And remember, let's grow our wealth together.